Hi all. In today's video, we are going to discuss how to leverage data and metrics as a competitive advantage to scale up your insurance agency. Now, when I was writing my book, Friendly Agent, I interviewed a lot of top experts in insurance agency space. And one of them was Ryan Dietz. Ryan is an expert in agency operations, data, and how to use metrics um, to leverage as a competitive advantage. And he also discusses what exactly are some of the numbers which you should be focusing, and that will help you in scaling up your insurance agency. So, without further ado, we'll dive into that interview with Ryan Dietz. And if you like this interview, then please hit a subscribe button and don't forget to like. I'm going to share more of such videos where I interview top insurance agency experts and bring their knowledge to you.
How are you?
Hi, Ryan. I'm good. How are you?
I'm good, man. I'm doing well.
Talking to Tony, he mentioned that you have a wealth of knowledge in technology side, and so maybe I thought I'll connect with you and get your views in this area.
Yeah, man. I'm down with it for sure. Anything I can do to help you. You know, I'm very reticent to call myself an expert at anything. But I've dealt with insurance agency data and operations and the leveraging of that data for a long time. And so that's kind of what my day to day is. Working with large agencies and doing data for them.
Okay, awesome. Brian, do you mind, talking about uh, how were you able to get into insurance
Sure, man. I mean,
and how
actually,
your journey?
I came from the tech side. So,
Okay.
I started out, heck, in 2001. I moved down to Tampa and with my wife at the time, and was looking for a job, and I was like just trying to get any kind of job I could get. I didn't have a college degree. I had my A plus and my Net plus certification, which are technical certifications that are kind of basic. Um, and I ended up landing a job at Tropicana Orange Juice after a couple earlier stints. And at Tropicana, they were a big facility.
Mhm.
And so I kept getting passed over. I was a contractor and I kept getting passed over being brought on full time. And so
Mhm.
after being there for 2 years, I saw an insurance agency position open up for a junior system administrator.
Mhm.
And so I went ahead and made the leap, got the job. And it was funny because I took a lot of hell from the people there because they would call me junior because I had that title, junior system administrator, which everybody thought was funny. But they had one of their business problems was the need to extract data out of the agency management system that they were using. And I didn't know how to do that. I didn't know
Mhm.
anything about data. I mean, I knew technology, I knew TCP IP, I knew, basic stuff. But the business need was we had to do some really in-depth research on some of the data that was in our system that we didn't have access to. And so about 2003, 2004, I started working with SQL to do data extractions from Sajita, which was a system that we were using there.
Mhm.
And then I was there for 10 years. And I mean, I was lucky because that place, the executives there really brought me in. I worked very closely with the CFO, COO, CEO, HR person to
Mhm.
understand how the data markers and the analytics actually translated to the business, and what was the revenue drivers of, I didn't know anything about insurance. I
Mhm.
always kind of hated insurance as a younger person. And so, it was like the man, it's the
Mhm.
most corporate thing you could ever do. But I've been lucky in my career. I think that the best thing is being able to work for firms that had brought me into their executive teams to help me understand what those problems were. Across the board, and then I could kind of understand how technology could solve that, and then how data played into that as well. And so that's kind of my story. And I was with an agency for 10 years, and then I was with an agency for 5 years,
Mhm.
and then I went to Assurex, which is
Okay.
a bunch of agencies, and I run their data strategy and their data products out of Assurex.
Okay, awesome.
But yeah, I mean, that's kind of how I got to where I got to, you know.
Sure. And I was like, reading about some of these, companies you work with, and somehow from their website, I was not able to figure out. So this the Lanier Upshaw, right? Is this the agency you work, and it was acquired by BKS Partners
Yep.
recently?
Yep.
So like, I'm just wondering. So are these wholesalers, or like, what are these
No.
folks doing?
So they're typically in all lines insurance agencies selling personal, commercial, and employee benefits,
Okay.
right? And so they are sitting in between the client and the carrier.
Okay.
So, and these are generally regional offices, right? Like these are regional companies
Hmm.
that know their geographic locations and the problems that are specific with that geographic location area
Okay.
better than a lot of the larger brokers would. And yeah, so Lanier Upshaw, and there was a really cool story at Lanier because we went up to like 14 million in revenue in 3 or 4 years when I got there,
Wow.
and then we went
Okay.
back down to 7 million once the recession hit, and that gave me just a tremendous amount of. Nobody cares about numbers too much when you're
Hmm.
winning.
Right.
Everybody cares a whole damn lot when you're losing, and so
True.
having to really dissect what was happening and why it was happening at Lanier was a big deal. But yeah, I mean, they're so that's a typical insurance agency. They have a personal lines division that
Hmm.
sells direct to personal lines clients. So like you or me would call in and say, "Hey, I need a car insurance." They would have a commercial department, which would be small businesses, mid-market businesses that would call in and say, "Hey, we're looking for insurance," and then we'd have a
Okay.
whole employee benefits division that would be selling stuff for the employees of of the companies. You
Got
know,
it. Oh, great. Thanks. And what about this AssureX Global? Like, what kind of product do they provide, and how are
so
they?
AssureX is a totally different beast, right? So I worked at Lanier Upshaw, and then I worked at Crichton, and Crichton and Lanier Upshaw, a very similar business
Hmm.
model, same deal,
Okay.
same products.
Hmm.
AssureX is a collection of 108 insurance agencies, right?
Okay.
So, and we act as a shared resource center for those agencies. So,
Okay.
if you have a $25 million agency, you probably don't have a lot of data analytics in place,
Hmm.
but they can leverage their AssureX partnership to help drive some of their initiatives, learn from different people. They can, we have dashboards for them. We also have all these different departments. We have a PL helper, right? So if you're trying to stand up a personal lines department, you want to
Hmm.
understand how to run that efficiently, AssureX will help you understand how to do that. But we
Okay.
actually act as a like kind of a nonprofit.
Hmm.
And when the insurance agencies buy into AssureX and they become a part of AssureX, they actually become an owner of it,
Okay.
which is a totally different thing. And we don't, we're not trying to get to 200 agencies. We like to be about 100 agencies. We don't see we have geographically exclusive contracts for the most part.
Hmm.
And so, but our agents are the best of the breed. I mean, yeah,
Hmm.
it's hard to find better agencies than the Assurex partners. They're just
Okay.
they're big, and they're typically very, very profitable and operationally efficient and innovative, forward looking, doing cool things. And so it's kind of
Got
neat
it.
to be in the middle of that, helping all those different agencies and then getting helped by those agencies. So I work
Okay.
with, all these folks to help them figure out what to do with data, how to handle data. And
Sure.
then we have a centralized data project that we do as well.
Okay. So if you don't mind, like, I just want to understand a little bit more. So for example, there's one agency here, say in Connecticut, and they want to be part of AssureX or something, right?
Mm-hmm.
So when they become part of AssureX, I'm hoping there must be, some fees they have to pay, or some kind of a membership, or right?
There is, and I mean,
Yeah.
typically, we will get a lot of agencies that call and say, "Hey, we'd like to be a part of Assurex," and we're
Mhm.
generally not open like that. That's not,
Okay.
you have to be a certain
Level.
revenue size. You have to have there's this whole like 7 month looking into your financials to determine if you fit the kind of the
Got it.
profile that we want.
Sure.
um, and if we have a space for that individual in the marketplace.
Mm-hmm.
Now with acquisitions that occur, we typically lose agencies through acquisition. When we lose an agency, so if an agency was in the Houston market and is not in the Houston market anymore, it's because, like Crichton or like Lanier Upshaw, they
Mm-hmm.
got bought by a larger organization. And we have some guidelines around who can be. You have to be privately owned
Mm-hmm.
to be a part of Assurex.
Okay. So for example, assume that, there is one agency who's big enough and, capable
Mhm.
enough to join. So like, are they joining a membership, and are they giving up, their ownership as well, or they still own their
No,
business
there
and
is
everything?
no,
Yeah.
we have
Okay.
really what they're doing is they're buying into a shared resource. So they're
Got it.
buying into knowledge, expertise, carrier relationships, right? So say that you're a new firm out of Houston, you join Assurex. We have CEO meetings. So all
Okay.
the CEOs come together and they all share information with each other, right? And so now you've got some CEOs of $100 million revenue shops talking to CEO of $30 million revenue shops, $30
Okay.
million guys able to see kind of what they need to do to get to 100 million, right?
Awesome. Mhm.
And we have folks that have really 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 good like life science programs or personal lines departments or commercial lines departments
Mhm.
or employee benefits, and everybody can kind of learn from each other. I mean, it's this collaborative kind of non-competitive spirit of helping each other get better, which is what kind of Assurex is all about.
Okay.
And then now we're getting into more tangible products, like we have benchmark reports for our firms. So if a firm wants to go after education sections,
Mhm.
we've created, here's a benchmark where we've taken 700 clients from all of our firms, done a whole bunch of research on them, and then gave back a report to all the firms. So when they go after an education client, they can bring this out and really know what they're talking about and help explain to the consumer why they're buying what they're buying.
Got it. No, thank you. So I think it's a good segue to move to our next kind of topic. So since, like, you mentioned you have been working with these top CEOs, managing these huge agencies and brokerages. So what are, few top things, maybe 3 or 5 things which you see them doing different than maybe a regular, a mom and shop agency, or some smaller might not be doing?
Well, I mean, I think the biggest one is, in every single agency I've been a part of, carrier relationships is the biggest, is a huge strategic initiative, right? Um, where because so much comes from profit sharing or from your commission percentage,
Mm-hmm.
and it is something you spend a lot of time talking about and running analytics on to make sure that the carriers that you have the best partnership with, that you're placing business with them, if the business is a good fit for them, obviously, right? We are a consumer advocate,
Mm-hmm.
but at the same point, w- you know we have these very strong relationships with a carrier, and so that to me is a huge freaking deal. And it's funny because in a $10 million revenue shop, you have an average of about 250, 300 carriers that you're writing business with. It's insane.
Mm-hmm.
Only 10 or 15 of those, though, will be actually important.
Okay.
Well, not from a level of like super strategic importance, right?
Mm-hmm.
You're going to be stacking 80% of your volume probably with those, and the
Okay.
rest are all these like weird one-off things, different markets, stuff that's strange. So that's one big difference, is that is just a huge freaking constant conversation topic. Obviously, the other one is operational maturity, right? When I look at agencies, operational maturity, in a small shop where you have 10 people, you have an office manager that's probably doing HR, wearing a multitude of hats. You've probably got 3 or 4 producers that are out selling, and then you have some account managers. Um, well, as you move upstream, everything gets way more defined, where you bring in a COO that's looking at ways to drive efficiencies, really keeping, trying to centralize tasks, to figure out how do we do things smarter, better, faster, just continually, and then wrapping process around that. Those are generally, that's the biggest difference that I see is, in a lot of the small shops, the top producer is running the deal. In a lot of the larger shops, it may be the top producer that's bought out, but they're going to have a team around them that's always thinking about the operational side of things, like, how do we do this more efficiently? How do we do this more profitably? What are those things? And then obviously, recruitment is a gigantic problem for large agencies. If you're a $5 million agency, to grow 10%, you have to sell $500,000 worth of business. If you're a $25 million agency, to grow 10%, and that's with a retention of 100%, obviously, you got to sell $2.5 million worth of business, right? On the revenue side. That's $25 million worth of premium. And it's a lot of freaking premium that you're trying to sell to grow that. And so you're constantly looking at ways to bring new producers in, make them successful, and get them out, and get them rolling. And that's just a constant struggle. With a smaller shop, you don't have to grow. You don't have to grow that much. I mean, if you're $1 million shop, it's $100,000. And so, we have producers, and most of the large shops, their production quotas are about $120,000 to $150,000 worth of new business a year in revenue. And so, you typically have a validation schedule of 18 to 24 months. So you bring a new producer on, producer has about 24 months to generate enough reoccurring revenue on their book of business to be able to justify their salary. And they start salary anywhere between 40 and 60,000. And then, but I've seen, and the success ratio is pretty low for a producer, but I've seen successful ones get really, really, really highly compensated. They make some money.
Awesome. No, thanks for sharing this. And these kind of insights, it's hard to get, and it's really helpful. So if you don't mind, I like to go a little bit deeper on each of these items. The first thing you mentioned about carrier relationship. Now, first problem which I see many of the new agents or smaller agency faces, getting carrier appointment itself. That itself is a big issue. So first, if you don't mind talking about this, how, and even I think bigger agencies must be getting new carrier appointments,
Always.
So what is what's the best way to do it? Or,
to me, bro, really what you would do is you'd go to an MGA. Look, because you can go knock on these carriers' doors all you want. But unless you have, and so if I'm a small agency, first of all, I'm going to be a niched out agency. I'm going to say, look, I'm not going to write everything. I'm going to write very specific things. And I'm going to so maybe I'm a producer and I'm really good at golf courses.
Okay.
Well, now I'm going to go find a carrier. I'm going to say, look, I've got expertise in golf courses. Over my career, I've built a $4 million book of business for golf courses, yada, yada. I can go to a carrier that does that specifically, create programs for that and sell on that, right? Going out to get 15 carriers as a small agency is not going to ever work for you. It'd be better to specialize and niche out in one or two areas that you're awesome at. The problem is most small agencies go after personal lines or small commercial. Large agencies, small commercial and personal lines, for most of them, I would say there's a couple of caveats, but for most of them, only drives about 8 to 12% of their revenue. It may be 80% of their clients in that segment that are only driving 8 to 12% of their revenue. Right. And that's in the under 5,000 revenue category. It's crazy how much operational spend you have to manage those versus the revenue that they bring in. But small agencies, they typically get an idea. Hey, we want to start selling business. We're going to go after the easy to win stuff. We can do that with, personal lines and small commercial because those are much shorter sales cycles, where I think you'd be much better off to go niche out, get that carrier relationship with a strategy. Because if you come into the carrier and say, this is my strategy for growth of the next 3 years, I'm going to target this. This is how I'm going to market out to that. This is how we're going to do. And this, we're sticking within this. And these are the values that we bring to that niche. You're a lot more likely to be appointed. if you have other lines of coverage, you could get an MGA to write that for you. But typical MGA commission percentages are about 6%, versus 12 to 14, depending on what you specialize in.
Okay.
But I've seen some really cool agencies. I mean, I've seen some agencies in I have a buddy that is in an agency. They specialize on high risk immigrants doing personal lines and commercial auto, and their percentages are 38% commission from
Wow.
the insurer, right? And so that kind of shop right there is run much differently than where you have most of the agency's average commission percentage. If I run all of it, is about 10%.
Okay.
But if you're running 38%, you've got a huge amount of margin there that you can do a lot with. But they did that purposefully. They targeted that class of business. They go after that because they kind of had a strategy behind it. And that's what I like to see. I mean, I think it's really hard for a new agency to stand up and say, "Hey, I need the Hartford, I need Hanover, and I need Westfield." It's not going to work because they are trying to limit their distribution as well. It's better to partner with an MGA, get a good deal on, what you can, build your book of business. After a time that you have that MGA, now you can go ahead and say, okay, I have, $1 million worth of premium with Hanover. I've shown you that I can grow with you. Can we get a direct relationship and take this MGA out of it? That would up my commission percentages significantly.
No, awesome. So I think this covers both appointment and carrier relationship. So second thing, operations, right? Like what I have heard, I've listened to some of the podcasts and everything, and people say that nobody knows operations better than you. So if you don't mind, I want to go a little bit more detail, when we talk about operations or agency operation, right? So what are some of the technologies which are being used or not used, which should be used, and what are some of the specific aspects where maybe agencies can implement it right away and get benefit out of it?
So I hope you like this condensed version of interview with Ryan. And if you are interested in watching full version of interview with Ryan and other top insurance experts, then don't forget to join Friendly Agent Pro. Link is mentioned below. And there you'll not only get these interviews, but a lot of learning videos, and you'll learn how to generate leads yourself, how to scale up your insurance agency. You also get free marketing advice, tips, strategies, and you'll get an opportunity to interact with similar like-minded agents. So I encourage you to join Friendly Agent Pro community, and link and details are provided below. Thank you.